Hi, everyone. My name is Julia Chernova. I'm a reporter for the Wall Street Journal. I write about startups and venture capital. And we are very lucky to have Melissa Guzy with us. She just traveled all over the world, from Hong Kong to Amsterdam to New York, Singapore rather, right?
Yep.
Melissa is co-founder and managing partner at Arbor Ventures, which is a fintech-focused venture fund investing in Asia and bringing US Israeli companies to Asia and helping them expand there. So let's get started. Thanks, Melissa, for being here.
Oh, thank you.
Well, first, I mean, there is a situation in Hong Kong now, and I just wanted to start with that because it's very current. Massive street protests going on, and I just wonder, what is your worry about it? Is that China is exerting greater control over the island? Is that going to have an effect on business there?
Well, I hope you promise not to quote me. We are out of Asia this morning, but it's a very sad day for Hong Kong. Was my home for 13 years, and I chair the HKVCA, and Hong Kong is clearly on a path of integration, a very fast integration into China. But there's clearly a lost generation there. I think as far as Hong Kong goes, it'll depend what role it plays. But I think what saved Hong Kong was the Hong Kong Connect, which is the linkage between the Hong Kong Stock Exchange and Shanghai, which is really probably at this point only one of the few reasons for its existence. But there's been pretty much a max exodus of expats to other parts. But I think Hong Kong is part of China, and at some point people will have to accept that. But as somebody who lived there for a while, it's a sad day to see what's happening, and you hope that the violence doesn't extend to much worse circumstances.
Now, and you made a move to Singapore about a year ago. What motivated you?
Well, it had nothing to do with the integration. It had to do more with pollution in Hong Kong. But I think for us at Arbor, if we were going to cover the region, meaning Southeast Asia, more closely, we felt it was better to be in Singapore than to remain in Hong Kong. Plus, we have an office in Shanghai. My partner is there. So we can cover that. But really, if we're going to cover ASEAN, where we think is the substantial growth coming in Asia over the next decade, we needed to be closer to be in Singapore.
Mm-hmm. Now, Arbor started, remind me, 2014?
2014.
Yeah, and you made an early stage investment into Lufax.
We did.
Which I think at the last round was valued at
38 billion. Yes.
But did you make any other investments in mainland China?
Well, we made Lufax. We had looked at 75 peer-to-peer lenders because at one point in China there were over 3,000 alternative lenders. But knowing the power of and really Peter Ma's presence in China, we decided to back Lufax very early, and that's paid off. I mean, their growth is substantial, and it's a wonderful company, and now they've expanded to other parts of Asia. No, we've spent the last couple of years investing in Japan as well as in Thailand and Indonesia. So we've actually stayed away from China given where valuations are, and also the complexity of the regulatory situation in China. We felt there were more opportunities where we could do better in other parts of Asia. Mm-hmm. But with that said, I think it's really important to note the innovation in China in financial services is absolutely spectacular. Everything, whether it's on the payment side or what's happening now on the banking stacks, there's nowhere in the world that we've seen this type of innovation from really beginning to end. And that's overflowing in other parts of Asia.
Mm-hmm. So could you compare, contrast what's going on in the US fintech world? We have our consumer banking, mobile banks. Chime has maybe 4 million users. We have our wealth management companies, startups under 1 million users. And they're segmented, right? Although there are efforts to integrate now and add more revenue sources. what is the landscape in Asia?
Well, I think it's unfair to compare the US to Asia. I mean, first of all, the US has significant financial service infrastructure. Yes, a lot of it is legacy, but it's unfair because in Asia, we didn't have that. So innovation has taken a very different path. But I do think when you think about scale, when things work in Asia, I mean, WePay, which is the bank for WeChat owned by Tencent, it's the 5th largest bank in the world by the number of transactions. This bank is only 6 years old, 300 million users. And I think one of the fascinating parts about banking in Asia today, which many people don't realize, and I think it'll take the world a couple more years to realize what's happening, is that Ping An, which has OneConnect, Hunsin, which is owned partially by Alibaba, has their own, and then Tencent has their own banking stack. These are full, brand new digital banking stacks that they are now implementing for free. So if you're a bank in Southeast Asia and you want to be digital, it's not about linking on the next API function from this company or that company. You can now have a full banking stack, 0 fees. Sorry, Temenos, Jack Henry, Fiserv. I mean, it's going to be painful. No more $85 million in 6 months or longer. 0 upfront fees, 2 weeks implementation, and they only get paid on new account openings. And what that does is that enables, banks that were once, older banks to become, completely digital without tearing up their legacy infrastructure. That's going to have a massive impact, just like the payment industry and creating new payment rails has had in Asia today.
And what is the reason that they are not charging any fees? How do they?
Because they're looking for the data. I mean, they're thinking about how I can monetize the data very differently. We have a philosophy that, basic financial services is going to the world of 0. You're going to have 0 MDR. You're going to have 0 loan origination fees, as you already do, 0 trading fees. The world is heading towards basic services are free. And then financial institutions will have to figure out how to monetize based upon premium services. I think that's very much in line with what we're seeing now. If you look at the new banking stacks, they're going down exactly the same path.
Could you give an example?
Well, I mean, so you can have a brand new banking stack, but if you want to offer your customers something that's more personalized, they can pay for that. Or let's say the bank wants better or different anti-fraud capabilities. You'll pay for services for that. But the actual stack itself or the core system is essentially for free. But we've also seen in Asia QR codes. Every time I come to the US and people talk about payments in Asia and you talk about QR codes and everybody looks at me and laughs and said, okay, Melissa, but what's the next technology? And you're like, nope, you just don't get it, right? In Asia today, QR codes are the brand new rail, right? You don't need Visa or MasterCard to process payments. And now what you've begun to see is interoperability between the different countries. So Thailand and Singapore and Indonesia and the Philippines will all be next. So why that's so interesting is not only the fact that merchant services can go digital without spending huge amounts of money on point-of-sale systems, but what also makes that interesting is that there's going to be a whole new treasury function that has to get provided in the back end for multi-currency, multi-country based on a QR payment rail system. So the innovation in Asia is just very, very different than the innovation in the US. We invest in the US, so obviously there's innovation in the US, but I would say it's just very different in Asia, and also the scale. We just have, we have what, 2 billion people that are all digital? So.
Right. You mentioned Tencent, some of the other companies that have a huge reach to consumers and are very active in fintech. What is the opportunity for early-stage startups?
Well, I think everybody thinks of Baidu, Alibaba, Tencent, and their power in the region, and I think that's true to a certain extent. But the opportunity, let's take Southeast Asia as an example. We have Grab and we have Gojek, right? You don't see that Ali and Tencent are necessarily dominant. Yes, They've invested very large amounts of money in the region, but they're not necessarily dominant. So the opportunity is we'll always see an opportunity for innovation from startups. In the B2C space, I would say is a little bit more limited, but in the B2B space, it's a wide open playing field for startups.
Mm-hmm. Any interesting examples?
Well, we particularly, I personally love fraud because fraud is global, 24 hours a day, 7 days a week, doesn't care about the macro economy. But so, I mean, that's a great example where we've been investing in anti-fraud companies, we'll continue to do so. I think another interesting example that's probably, we invested in a company called TrueMid in New York, which is a capital markets bond trading platform, along with the SGX, the Singapore Stock Exchange. And now there's a joint venture between the Singapore Stock Exchange, the Hong Kong Connect, and one of the investors, the private equity firms. Because actually, for the first time, Chinese bonds are now being included in the indices globally. And so there's, that's an opportunity that you wouldn't necessarily see if you were just sitting in the US, but when you're sort of cross borders like we are, you tend to see these things. We also tend to invest behind our own pain points. Having lived abroad now for 14 years, every time we hit a new pain point, it goes on our investment target list out of frustration.
What's the most recent one?
Oh, well, I get declined all the time on credit cards. Like, why? Because, when I'm, living in Hong Kong, I use a Florida mailing address. I'm shipping to a house in Maine, and I'm forever declined by a credit card company. At some point, someone would just say, "Who is Melissa?" and just say, "Fine, we know this triangulation." So, of course, that went on our list of things.
Have you found a solution?
Sure. Yeah, we've invested in Forder, and we'll continue to invest in the space. Identity and personas are very important in a global landscape. So I think, we look for themes. We heard Max this morning on Affirm. We've invested in a company, Paidy, in Japan, one Akulaku in Indonesia. People have never probably heard of the room Akulaku, but they have 20 million customers. And they're in Indonesia and expanding to Vietnam and the Philippines. So when you go back to the scale, again, when it works in Asia, it works in a very big way. But really, customer traction is absolutely key.
Mm-hmm. Now, a lot of your companies, and you help facilitate with us cross-border deals and expansion of market opportunities. Now, the governments in China, in the US, and other places are getting more restrictive, less interested in this type of...
Well, we have a view. We've addressed the issue on the trade war. Mm-hmm. I think it's going to have a lasting impact on global supply chain. I think today, let's face it, China, #1 trading partner is Asia. Second largest trading partner, Europe. Its third largest trading partner is the United States. So when you think about really the implications, when you think about the fact that China is going to buy $1 trillion worth of airplanes, do they buy Boeing or do they buy Airbus? So it's a shift coming. And I think, China will continue to get whatever they need from any part of the world. I think truly the only thing they're dependent upon the United States for is probably semiconductor equipment, but definitely not financial services. Maybe USD clearing, we'll think about that. Maybe that's why Hong Kong did the digital banking licenses to get the Chinese banks' US clearing capabilities. That's a complex issue. But I think we'll just see a global shift. I think we're going to go through a period of somewhat of deglobalization. I think it's pretty clear that it's not only necessarily between the United States and China, the shifts, but also ASEAN and other parts of the world are becoming much more concerned about who their trading partners are with, which I think also provides a lot of opportunities in our part of the world. I mean, let's face it, some of the most tweeted places in the world are Jakarta and Manila. Who says they're going to stay on Twitter or Facebook? Maybe we start to see some localized solutions start to replace that. I mean, I think Kakao is on the other stage. It's a complete solution with messaging and banking and very much like WeChat Pay. Doesn't necessarily, but I do think we'll go through somewhat of a period of deglobalization and a long-term potential shift in the global supply chain, which opens up a lot of opportunities.
The restrictions have to do with, like in the United States, for example, the government has restricted Chinese investments into U.S. startups,
yeah.
right? And we're already seeing a drop in investments now. Where is that money going?
Southeast Asia. I think, so the Chinese investors can just shift their attention somewhere else. I think CFIUS is again, long-term. I think it's going to impact less, probably maybe on fintech. It has, or it did with Alibaba with MoneyGram, but clearly biotech is probably more impacted than that.
So how is the market changing, the venture market in Southeast Asia now?
It's much more mature. I think years ago when we made our first investment in Thailand in 2014, people really didn't necessarily believe in the market. I think it's pretty clear now that Indonesia and the remaining of ASEAN is a real market. It's got 600 million people. It's growing rapidly. Financial services are changing pretty dramatically. I think a lot of the Chinese investors are coming to Southeast Asia. That trend will continue.
You talked about deglobalization. At the same time, we see in fintech a lot of startups. I feel like this year, even European fintech companies coming to the U.S. You're bringing companies to Asia. What is the reason for that? I mean, don't they have a huge market in their local geographies?
Well, I mean, we haven't brought European companies to Asia, but it's mostly been Israeli companies, and the technology is very good and very advanced. And I think in Asia particularly, they're very open to Israeli-developed technology, especially around AI and fraud. I mean, Singapore's had a very, very long relationship with Israel, and so that bringing them over. I think, the thing we do when we're sitting in a meeting and someone says, we want to go to China, the first thing is I say, why? That's probably the last place in Asia you'd want to go if you're a fintech company and you want to expand to Asia. There are a lot of really interesting markets. Japan's still the third largest economy in the world. China is going to continue to prove extremely difficult for any US technology company. But when you're thinking about Asia, don't think about just China. There's an entire market beyond China for companies to come to.
What are the biggest policy changes in Asia, in the markets where you invest, that affect fintech?
Well, it's like 10 countries. So on policy changes, I think it's hard. I would say, let's see. The one thing people don't realize is the FSA in Japan is probably one of the most advanced thinkers on fintech. Most people don't realize it. They always think about the countries that are waving the flag, whether it's Hong Kong or Singapore. But I think Japan has done a terrific job. So I think you have to understand the regulation by country. I mean, Thailand's another country that has been extremely progressive. So I think you have to think by country about the regulation, and then that, of course, leads over to how you think about scaling your business outside of the initial country that you're in.
Okay, time for the overrated, underrated. So I guess Hong Kong IPOs.
That's really difficult. Hong Kong IPOs, I think Hong Kong will continue to lure tech companies off of NASDAQ and the New York Stock Exchange back home to Hong Kong.
Somebody asked about fintech unicorns. I'm interested in the ones that are just 1 year old.
Oh, overrated.
Bitcoin?
Overrated.
Anything else to say on it?
Well, I think, I mean, I'm not against cryptocurrencies, but I think there's going to continue to be backlash by the monetary authorities unless there's some boundaries put. Anybody who hasn't read the book of 1MDB, you should, because it's probably the greatest story in money laundering around, and that had nothing to do with Bitcoin. But I think after 1MDB, especially in our part of the world, there's a lot of sensitivity to where money is going. And I think that they're not going to lessen up on AML for quite some time. It took Arbor 4.5 months to get a bank account. We counted 16,000 steps, 8 grab rides, 4.5 months to get an account set up when we already had an account at the same bank in Hong Kong. anti-money laundering is a challenge for financial institutions.
So what is overhyped right now in terms of fintech sectors?
Well, overhyped, I think extraordinary valuations before proven business models. I don't think it's one sector or another. I think there's some people that are absolutely spectacular at raising money. But I think at the end of the day, we're looking to invest in companies that have sustainability and longevity and really solving some of the world's problems.
Okay, well, thank you so
Thank
much.
you.